You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined by K State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting off our conversation with what are futures looking like?
Well, coming up afterwards, of course, is here at 11 Central Time is the USDA reports, and ahead of that, we've got futures over the week that've been trading in kind of a range bound way. So whatever comes out of that report here at the top of the hour, with I think I would it's probably good to judge if we do get a response whether we break above or below these trading ranges that we've been in. And so we closed for July wheat, which there's the May contract is in its last few days. May corn closed at 442 and three quarters, but it's July corn now that we're paying attention to as the lead contract for grain elevators and others that are hedging. 456 and a half, and that's been trading basically in a range from about 440 to 470. So, it's very likely that our expectations won't be just dead on, won't be right on in terms of what comes out of these reports. But if we do see some movements, then the market will pay attention as to whether we're below 440, if it's bearish, above 470, if it's not, and if it stays pretty much within that range sideways, then yeah, it's kind of a not a lot of volatility coming out of it. For soybeans, closed in the July contract at 1208 and a half. And the July contract has been trading, well, it's been really quite volatile. Had traded up to about 1355, 1356 thereabouts. Within the last few days, it's come back down to again 1208 and a half. We had been trading within the last month as low as about 1150 or so, and 1160 is kind of a bottom that had come in. So there's been a lot of movement in that contract. We shall see where things come out on that. We could talk about at least what I think we'll end up and see later on. Pardon me. And then for wheat, July wheat 651 and three quarters. We've been trading, really had been pretty strong. A lot of that based on uh, crop condition fears here in Kansas, as well as some overseas worries for production, for freeze, for drought, whatever, over in Russia. Again, closed 651 and three quarters, as we'd said on yesterday's trade. Had traded as high as 675. Recently about 625. So you got about a 50-cent range there, 625 to 675, about 651 yesterday. And if we do get major changes coming out of that, the market's perspective, something that challenges them to have to change how they think, then we probably would be breaking through on the high or the low side on those price ranges.
And before we talk a little bit more about that WASI report, Dan, what are you seeing for cash?
Um, Still seeing, if anything, probably some strengthening of basis for corn in some of these areas. We have of course, 482 as the high price listed in the area in the Garden City area for corn. A positive 26 basis, but now you've got a little bit more positive top price in Colby at 11 over. Again, 11 over in Colby, 26 over the July contract in Garden City, 5 over in Topeka, and Hutchinson had been pretty strong. Actually, he's now about 5 under, and about 1 under in Columbus, Salina about 20 under. New crop bids, only one of them positive in those areas. Again, the Garden City area, 495, 15 over. Everything else topping out at 475, 457, 455 thereabouts. So not a lot of other changes coming in. And grain sorghum pretty strong still. The strongest bids in Hutchinson at 19 over 476. The corn price in Hutchinson, top corn price 452. So still some seemingly some export demand in that area. Soybean bids all again top price 11 68 in Hutchinson area, 41 under, 1154, 55 under in Topeka, and others at either 66, 90 or $1.20 under. The farther west you go, the weaker the basis bid gets for beans. That has to do with transportation costs and where we're going to process them or export them. And new crop bids all ranging. Basically a range of 1101 on the low side, 1166 on the high side, 1101 out in northwest area, around again uh, Colby, Garden City, pardon me, Colby, Goodland, Hoxie, in those areas, Oakley. Uh, Top bid, again, 1168 Hutchinson, again, a little closer to the either exports or processors. And as such you go. And then for wheat, again, wheat harvest impending. We're basically halfway through May. Folks are wondering what the cash prices are doing versus new crop bids. And generally, we're seeing uh, top bid for wheat at about 646 for Hutchinson, at 6 under, 636 in both Salina, Topeka, both 16 under, and then 602, 603 in Garden City and Columbus, and that being about 49.50 under, and then a little bit weaker at 577 out in the Colby area. That's for cash, and then new crop bids not a lot different. A little higher new crop bid than the cash, and for Colby, for Hutchinson, and lower elsewhere. So not a lot going on. So cash prices, they'll respond to whatever we see coming in to change the view of the markets for both domestic and international grains. And there's some open questions in terms of what the USDA will say. However, if they follow their regular patterns, you're probably I think their first thing to assume is that we'll see no major surprises. But uh, especially on the domestic side, we kind of have an idea where things are going there. Internationally, still an open question on South American numbers. More numbers out of Brazil and Argentina showing a weaker production than the USDA numbers. But until those things get reconciled with more evidence in hand, it's hard to say that that'll be a big price mover in terms of what comes out of there. Apparently we're going to wait and see until we know for sure that those crops are short before we make any adjustments. However, when those adjustments come, it'll affect world ending stocks, world usage, supply demand ending stocks for corn and for soybeans. And so somewhere out there that those differences will be reconciled. I would say on the domestic side, if I can just jump into there, Shelby, that projections of corn production for the U.S. By the trade are about 14.9 billion bushels, and that's with the 180.3 bushels per acre. And again, the USDA earlier had said 181 at the outlook conference, so it seems that you've got that dialed in. And then ending stocks projected for corn at about and that'd be for the new crop marketing year at about still over 2 billion bushels, at about 2.2, 2.3. So I guess we're just gonna have to wait and see how that all plays out. I do wonder basically about lower usage at than what I'd anticipate. Again, we've got production for corn, especially a little bit lower. Soybeans, moderate to just a little bit lower than expected for the U.S. for summer of this year, and really makes you wonder where we're at. Big news. Most of the information on this. I don't want to short wheat in that you will see the USDA's projections for hard red winter for the winter wheat classes, and projection of 600. Well, the market's anticipating about 680, 690 million bushels projected by the USDA in this report. Last year we were at 601, so we've got this 601 million. So you know what, we've got a conundrum on our hands, and parts of Kansas being in really bad shape, South Central, etc., and otherwise Some areas have caught rain, so I don't know that we'll have an answer to this till we get again beyond May into June and July and finally reconcile all that. All that said, though, there are some areas in the state of Kansas where wheat conditions are not very good, and we'll balance all that out and see where we end up at.
Dan, poor crops in Kansas. What else are you seeing for their conditions?
Uh, for the uh, well, for corn, percent planted in Kansas, 51% as of May the 5th, so a little bit more here of late. And emerged for Kansas at 29%, and both of those are about 8, 9, 10% ahead of normal. For soybeans, we've got Kansas plantings at 22%, normally are 15. So again, ahead there as well. Emergence 5% as two. So that doesn't, even though we're doing better for in terms of pace, that doesn't necessarily mean we're better off if it's into dry conditions. Cotton planted 4%. We average about 6, so we're just starting in on that. Sorghum 4%. Just very beginning parts. So so uh, in terms of crop conditions, of the main issue that we'd be looking at would be wheat, and wheat heading, excuse me, 54%. We're normally at 21%, and that's not necessarily good. It means we're dry. We're accelerating. Wheat conditions in Kansas, 29% good, 3% excellent, but then 35% fair, 21% poor, 12% very poor, and that's really our concern in this issue that people are going to be weighing as we go forward. And you know, uh, what what you and I are talking about really depends on what comes on the weather side. So whatever Chip Redmond says in our shop about moisture coming, that'll carry the day for the next 30, 60, 90 days. What weather now, once these crops are in, what weather conditions are we going to get? And from there we'll take those supplies and figure out what prices we need to ration out usage so we have comfortable ending stocks. And that's sort of I wouldn't call it the game, but that's sort of the process that we're moving into right now.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be right back.